The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
With our Stock of the Day, and that is in the fast food space, Collins Foods. In fact, it saw half-year net profit rise nearly 13%. To just over $27 million. It says it's targeting underlying NPAT growth in the mid to high teens for the 26 financial year. Sales growth in the first 7 weeks, it says, the second half continued positively, and the firm is paying an interim dividend of 13 cents a share. Specifically, KFC revenue there up some 5%. Rudy, let's start with you. How do you view Collins at the moment?
Well, let's start with the fact that it's even more important than everything you just read. They've upgraded their guidance. And that's obviously, we pay close attention to corporate results. And most of the results we've seen in between February and August, in August, now post-August, most of the results we've seen are actually skewed towards disappointment and to failing to meet expectations. We only have to look at yesterday, Metcash down 9% the share price. Clearly, they missed expectations. Most companies have been subjected to share price weakness, and then Collins Foods comes out and they go like, we have a better story to tell. Now, on a broader view, as you can see also from the price chart, if you have a longer term view, I mean the share price is where it was 5 years ago, but in the meantime they have these cycles where they go through, cycles where nothing happens, share price down. And then they have these recovery rallies. At the moment, we're in an uptrend recovery rally. So the only thing I can say is, I mean, the share price now doesn't look cheap, but they've just upgraded their guidance. So
but just upgraded their guidance. Why are they down 1%?
Well, clearly the market was already expecting a very strong result. Yeah, I mean, and also, I don't know. I'm not selling. Yeah, I wasn't there in the first place. But it may well be. I mean, this market, as we discussed earlier, this market is above anything is not very strong on continuing momentum, and you will find lots of stocks that are listed. If they are trading on above average PEs, Sean has already referred to it. They tend to see profit taking at the very least, if not something worse. This one is not trading on particularly cheap multiples. It already has done a lot. But apart from the general sentiment, I think you can probably assume that this share price is in for a higher level at some stage. Yeah? Because I mean, higher profits, the analysts will come out and they will all revise their forecast. Yeah? The one thing I maybe put here as an important input is then if you look at the past 10 years, the past 5 years or so, this stock has its cycles. Yeah? So you have to be careful to maybe date it, but don't get married to it. Because you may have to wait another 5 years before you get to the same price level. But at the moment, it's all hunky-dory, even though the share price today is maybe not shooting up.
Yep.
But then general market sentiment is not, outside of resources, is not fantastic at the moment. The market is often questioning whether they are looking at its knees or its elbows.
Interesting way of looking at it. So I'm assuming that's a hold for you then.
I would stay with the momentum here.
Yeah.
But I'm not a big fan of they call it fast food. I still use, I'm showing my age, I'm still using junk food. It's very unhealthy for you, and it can be unhealthy for your portfolio as well.
Is all fast food junk food? I don't know. Some would disagree, I guess. But I take your point.
Even Subway is not that healthy for you.
Yeah. Okay, Sean. Now, to be fair, you didn't get your homework on this one. So, off the top of your head, what do you think of Collins?
I can make a few comments. I do like Rudy's line where it will go up at some stage. I thought that was brilliant. Sorry, Rudy, but that was a classic. Look, I think this is definitely junk food. My son eats it till the cows come home, and I refuse to pay for it. So every time he mows a lawn and gets paid for mowing the lawn, he can buy his own KFC. I've got no interest. I can't eat the stuff personally. I think it's horrible. But anyway, that in itself does influence my view on the share price. I agree very much with Rudy. It's very cyclical. It hasn't moved in the last 4 or 5 years, and it is vulnerable to downturn in the economic cycle. If people are feeling a bit poorer, they spend less money on things like this. And we're not going to get rate cuts next year. We might get rate rises. Personally, I think we'll get no change to interest rates next year. They'll go out on a limb and say we won't get changed until 2027. So I think this cycle, this recovery, is probably in the mature phase. And I'm going to go slightly different to Rudy. I'd call it a hold. And by that, I couldn't see no reason I'd be buying it here, so I'll call it a hold.
All right. Despite the fact
that's
that
what I said.
Yeah, well, you did.
Well,
it's
said
not
you're
contrary to
buy,
what he
but-
said.
But I couldn't buy I couldn't sell it because it came out with an upgrade. That's healthy.
So we're
It's
saying
healthy, yet it's junk.
So we're saying
Exactly. I play on words all over.
healthy for the share price.
All right. Okay. Well, make sense of that then. It is a double hold then for our stock of the day, Collins Foods.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.